Hello, my name is Justin Hughes. I'm the head of Aluminium Raw Materials at CRU International. Today I'll be giving the bauxite and alumina market outlook. It's important to have a look at where we are in terms of the recovery shape. We are now starting the long slog. Central banks and governments are active in their prodigious use of monetary and fiscal policies. It's going to take a little bit more time to get a true image of the resilience and stability of global economies. What is clear is that China's recovery, their ability to capitalize over the past 12 months, has seen a differing pace in terms of GDP, industrial production, and consumer confidence versus rest of world. Before looking at the bauxite and alumina markets, it's worth having a look at the underlying primary aluminium market outlook. Aluminium demand across key end-use applications, such as building and construction, transport machinery, equipment, consumer durables, as well as other industries, have picked up better than originally expected over the final few months of 2020 and into Q1 2021. Surprisingly, a new wave of COVID-19 infections and the reimposition of curbs on movements and social gatherings across leading consuming regions such as North America and Europe appears to have had little impact in terms of the demand recovery. The initial fast pace of China's economic recovery from early Q2 2020 contrasts sharply with the comparatively slow recovery from lockdown across other major economies. However, in recent months, there's been a more meaningful recovery in manufacturing. So moving to alumina, CRU's Alumina Price Index, the API, which is FOB Australia, is currently averaging around $300 per tonne in Q1 2021. That's up $20 to the previous quarter. This is despite a long position in the global market that is exhibiting a surplus of just over 550,000 tonnes in the first half of this year. Alumina spot prices have remained steadily weighed down due to some unplaced cargoes in the Pacific region, and is also currently unperturbed by the aluminium price reaching multi-year highs. US yields continue to rise on strong stimulus, feeding into market concerns about upcoming inflationary pressure. This has been the story that pulled the aluminium price higher in February, with the prices testing upper bounds around 2,200 to 2,250. The same is true to some extent in China, with the SHFE aluminium price breaching 17,000 RMB, while the Chinese alumina price basket is closer to 22 to 2,300 RMB per tonne. We are seeing independence between these two markets, and alumina is around 12% of the aluminium price. CRU's Atlantic basis price, an ABP, which is Brazil FOB, is currently around $300 per tonne also, but is expected to exhibit a premium versus the Pacific over the next month or so. They've traded at a premium due to the fallout of higher ocean freight rates and some tightness also in the Atlantic region when acquiring cargoes compared to the oversupply in the alumina spot market in the Pacific basin. Recent indications suggest freight rates for handy-size alumina vessels between Western Australia and China have reached nearly $40 a tonne, and that's up $20 a tonne month on month. Freight rates have been high at the start of the year, with strong demand being the key rationale behind that. In addition, there's some port congestion in China that's also occupied vessels for longer than expected. So there is a genuine tight market for dry bulk vessels. Now, looking at customs data, Chinese bauxite imports picked up in our pricing perspective above $45 a tonne China CIF in November last year. Guinea bauxite prices have been underwhelming in recent months, but they did also pick up slightly towards the end of 2020. However, in December, prices moved back to $44.35 China CIF at the end of December. Bauxite demand has been exposed to the temporary transport disruptions in northern China. However, the disruptions in alumina capacity in Shandong from coal supply tightness are likely to be fully resolved by the end of February. So we are now seeing the end of that effect. But it is noted that China is still a key importer of that bauxite material, with 7.5 million tonnes of bauxite in December alone imported. It's also useful to look at it on an FOB basis. Bauxite prices have been range-bound over the last quarter. Australia FOB prices have traded in a region of $27 to $31 a tonne. Guinea FOB prices have traded in a region of $31 to $34 a tonne. And Brazil FOB prices have traded in the region of $25 to $36 a tonne. So, despite some challenging market conditions, CRU estimates that only 12% of alumina production was loss-making in Q4 2020. The vast majority of loss-making alumina capacity is located in China. The share of loss-making production in China totaled 21% and 2% in world ex-China. In terms of the developments regarding refining cost components, caustic soda prices have been falling in China. Generally speaking, Chinese companies are becoming increasingly self-sufficient in alumina. That's the driving factor behind the lack of volatility in the alumina spot price market compared to recent years. In terms of cost escalation over time, combined with improving aluminium prices and narrowing alumina surplus, we expect this to result in alumina prices moving up to $355 a tonne by 2025, which is the end of our forecast period. That's equivalent to around 80th percentile on the refining cost curve. The improved alumina demand and price environment has had a bearing on our alumina supply forecast, which we have been upgrading accordingly. In China, metallurgical grade alumina supply is expected to increase by more than 12 million tonnes per year over the next 5 years, and that's driven predominantly by committed refinery projects in Guangxi and other provinces such as Guizhou and Inner Mongolia. Progress on some refinery projects has been slower than expected, and thus we've delayed some of those timings. That's such as Shanxi Fenyang by a year, and the timing also of the Geely base mining and Inner Mongolia Shifeng by 2 years. The eventual emergence of some of these refinery projects will result in additional closures in northern China. In the Middle East, production is expected to remain steady at around 4.3 million tonnes per year. Now that EGA's 2 million tonnes per year Outer Wheeler refinery is operating at full capacity, and that's pending any future brownfield expansions at the site to further reduce the company's dependence on third-party alumina. So on that particular project, it has a 2 million tonne per year design capacity, which produces monthly production of around 167,000 tonnes. The company aimed to reach sustained production of nameplate capacity in 2020, and this was achieved. The refinery cost $3.3 billion and meets 40% of the alumina requirements for EGA's aluminium smelters, and that's replacing alumina that was imported. In addition to the actual plant itself, the opening of the South Quay at Khalifa Port at the start of the year has taken its first shipment of Guinea bauxite ore for the refinery, and we will expect to see increased shipping volumes over the coming quarters. In India, MGA supply is set to increase and reach just over 8 million tonnes by the end of the forecast period. Hindalco is aiming to commence production at the 500,000 tonne per year expansion of the Upcar refinery later this year. We have Vedanta's Lanjigar refinery that is approaching 2 million tonnes per year as an operating rate, and there's a potential further expansion to 3 million tonnes per year in the near future. Outside of there, in other Asia, there are gains to supply to the metallurgical grade alumina over our 5-year forecast, with committed refinery projects in Indonesia as well. CRU expects world alumina utilization rates to climb to nearly 86% by 2025, and that's compared with 81% in 2020. We have actually now removed all unallocated refinery closure assumptions outside of China. In China itself, any closures are likely to take place in the northern provinces, as previously mentioned, and that's as new refining capacity comes on stream. There remains just over 8 million tonnes per year of idled refining capacity outside of China, However, most of this capacity is still unlikely to restart anytime soon. CRU estimates the closure and restart costs is equivalent to $50 to $80 per tonne for alumina refineries outside of China. In the alumina refining sector, market participants are focused on initiatives to reduce emissions throughout the aluminium value chain, including the production of low-carbon alumina. Alcoa recently introduced EcoSource, produced with no more than 0.6 tonnes of CO2 per tonne of alumina produced, which is twice as good as the industry average of 1.2 tonnes of CO2. These measurements include direct emissions from the bauxite mining process, the alumina refining process, and indirect emissions from the energy consumed in these processes. Whilst greenhouse gas emissions do not currently represent a significant cost, emissions have become an important talking point in global commodity markets, including aluminium smelting and alumina refining industries. An increasing number of alumina refineries will come under pressure on the subject of CO2 emissions in the near future. So moving to our market balances, by Q4 2021, CRU expect the Pacific alumina price to move towards $315 per tonne on average. This reflects the alumina market transitioning to a broadly balanced state with only a slight global deficit. This follows sizable gains in metallurgical grade alumina demand. World ex-China alumina demand is expected to increase by more than 5% year on year in Q4 2021. And this considers zero smelter closures in this profitable environment. Meanwhile, Chinese alumina demand will be supported by the last surge towards the smelter capacity limits. Cost escalation, already mentioned, combined with improving aluminium prices and narrowing alumina surplus, is expected to result in the alumina price moving above $350 a tonne by 2025. This includes higher caustic soda charges and benchmark energy prices. In terms of bauxite, total bauxite demand is expected to reach nearly 400 million tonnes in 2025. That's up 50 million tonnes compared to 2020. Of that, metallurgical grade bauxite is expected to reach 375 million tonnes by 2025. That's an annual compound growth rate of 2.9%. The increase in bauxite demand estimates reflect the upgrades to aluminium and alumina demand. China is driving the growth in bauxite demand, and Chinese demand for metallurgical grade alumina is expected to increase by 34 million tonnes over the next 5 years. So that's surpassing 200 million tonnes by 2025. Considering the bauxite situation in China, most of the new alumina refineries in China intended to use imported bauxite. Bauxite supply is expected to increase this year, driven by additional Guinea bauxite tonnages. Global bauxite production is expected to reach 390 million tonnes in 2021. This is again driven by Guinea, and CRU expects bauxite supply in the country to increase by 19 million tonnes this year. This is further upside potential to supply over the long term, but this will increase the likelihood of unsold tonnages in the third-party market, with the bauxite market currently extremely long. In China, domestic bauxite supply will be underwhelming, with refineries instead focusing on utilising imported bauxite from Africa, Australasia and Southeast Asia. Environmental inspections and restrictions continue to hamper bauxite supply in China. Chinese supply is expected to total about 84 million tonnes this year, which is flat compared to 2019 and notably below peak domestic supply levels previously achieved. So gains in third-party supply currently outweigh demand, and CRU expects the third-party market to be in surplus by 5 million tonnes this year and 4 billion tonnes next year. Bauxite prices will eventually move positively as the third-party bauxite surplus narrows towards the end of 2025, and we would expect Guinea bauxite prices to return to 2019 levels by that point. So what are the most important themes coming up for the aluminium value chain? Well, it's certainly emissions, the move towards green or low carbon aluminium, but also the move to electric vehicles from internal combustion engine, which increases both aluminium intensity, but also the amount of aluminium used in the chassis itself, and move away from steel. So these are the key things to watch for: scope 1, 2 and 3 emissions, and the eventual impact of those carbon emission costs on smelter and alumina cost curves. Thank you for your time today, and I welcome any questions directly to CRU Group. Thanks for your time.